Welcome back to America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. That's 419-794-3030, online, arhq.com. If you missed the first half of the show, you want to catch up on previous editions of the show, all available for you on demand, Apple Podcasts, Spotify, YouTube, wherever you consume your media. It's there for you to check out at your leisure. Just search for America's Retirement Headquarters. It's right there for you. Finally, the Federal Reserve began to cut interest rates this past week, and it looks like they're just getting started. Wealth manager Mark Newton tells Fox Business, if the Fed's future cuts are more drastic, the market, well, could feel a correction.
Historically, it's been 2001, 2007 when the Fed cuts more than 25 basis points, and it's been problematic to stocks. So, there is about 200 basis points of cuts right now priced in between now and next July, which is an extraordinary amount right now. But we are in election year, of course, and you really want to be cognizant of that. The market's very ready for this of now. The Fed does not want to disappoint the market.
So a bit of uncertainty possibly ahead. Is now a good time to take any profits and maybe rebalance for whatever may come down the line?
Well, if you go back to our economic summit that we did in the beginning of this year, we had talked about what some of the top strategists had projected for the market during an election year. And, the good news was a majority of economists had predicted the market, and strategists felt that the market was going to be positive in an election year, which is what we talked about. Mm-hmm. That's exactly what happened. I would think, from here to the actual election time, I would expect continued volatility overall in the market. September has historically not been very favorable in the market. We've seen more volatility now. And, when you're looking at, taking profits and rebalancing in the portfolio because of the uncertainty ahead, the first thing that I would say is there's going to always be uncertainty when it comes to investing. There's always going to be people that are predicting a correction is coming. There's always going to be people that are predicting that the markets are going to rally. If you want to know what the Retirement Guys and America's Retirement Headquarters predictions are for the future and how to get ready to not only survive and thrive going through this time frame, what I would tell you to do is go over to our website, arhq.com, click on the events tab, and come out to one of the two events. So number one we have coming up at Mancey's is we're going to be talking about the 5 threats and opportunities facing retirees. And the second event that we have coming up is going to be our semi-annual economic update. At the economic update, what we're going to do is we're going to have a panel discussion where we're going to be talking about the state of the economy. We're going to be looking at where the numbers are, and we're going to be talking about strategies to move forward. So 2 great events that you can participate in. Going back and looking at, should I rebalance my portfolio before year end? I would say that one is, when is the last time you rebalanced your portfolio? In the model portfolios that we have, that we build out, what we would normally do is we would normally rebalance a portfolio about twice a year. So twice a year can be a good time where you're selling off some of your winners and you're rebalancing into ones that are a little cheaper that you feel that there's still good opportunities with. You also could look to rebalance your portfolio when markets exceed one level or another. If we go back and we look at the thought process, if your goal was that the market was going to go up 5 or 10% this year, and if the market's up 15 or 20%, that would tell you that markets on the equity size, maybe raced up a little bit quicker. So we've got, 2023 was a good year in the stock market. We've got 2024 was a good year in the stock market. Maybe you've just set it and forget it and haven't looked at things for a while. You could be the type of individual that would, benefit from a rebalance because you haven't done it in a little while. The other area is taking a look at, what does that present an opportunity? So if you're going to go maybe from equities, you move more money into bonds. And as we talked about in an earlier segment with the Federal Reserve looking and lowering interest rates, that now makes bonds a little bit more attractive. So there was a period of time where bonds were kind of beat down in the price because of the interest rate fluctuation that we have. And rebalancing allows you to take maybe some money off of the equities, move money over into the bond category, sticking with that. And then it comes down to, your measurement of risk and determining what you feel comfortable with. Short term, I'll be the first one to tell you that I'm willing to give you my opinion about what the market's going to do, but the market doesn't care what my opinion is. I just know that the market is at an all-time high. So the things that we're talking about with our clients is, what is your downside exit strategy? Have you run the fire safety drill with your portfolio? And if you're not sure what to do, again, in that retirement team action plan, one of the things that we're going to do is we're going to run a stress test on your investment portfolio. We're going to look, for opportunities on how maybe we can drive it up a little bit. Another good example, we talked about John and Mary, and again, John's getting ready to retire at the end of this year, and Mary is also already a stay-at-home mom. And with their plan, looking at it, we put their investments in our software, and we're able to take a look at what their overall risk number is. We measure risk in terms of 0 to 100, and they were, about a 60 level risk. And so what that means is that, John and Mary are moderate to moderate growth oriented type of investors. In stress testing their plan, what we could see is that if we go through another 2008 type of environment, what the portfolio results could look like in a major sell-off. In John's situation, he had the majority of his money invested in his 401k in a target date fund. He also owned a variable annuity that had a moderate allocation inside of it. Both of those 401ks and his annuity were subject to stock and market risk. What we were able to do is we were able to take and talk to him about, with the market at an all-time record high, maybe you take some of those assets and reposition them now, taking advantage of where some of the higher rates are in non-market type risk investments. And then explaining to him what the methodology was or the philosophy of what he owns. He didn't really have a good understanding of what the methodology was of his investment in the annuity or inside of his 401k. But when you know the process, or the process that, say, we go through in explaining to our clients the Retirement Guys formula on how we pick investments, what it can do is it can help you avoid making those emotional decisions of fear and greed, and instead put you in a situation where you could take advantage of opportunities. In this case, maybe taking advantage of opportunities to lock in some profits and rebalance before the market sells off. That allows you to take advantage of where some of the assets that are a little bit lower in price have maybe a little bit more potential for shorter term price appreciation. So if you're laying there at night and you're within 5 years of retirement, this is where it really starts to get crucial. If you have retirement coming up in 5 years, or you've retired in the last 5 years, the market and what could happen could have a much bigger impact. If you're not confident in your plan, that retirement team action plan will allow us to show you mathematically what's at risk. And you want to know what's at risk before something bad happens, because waiting until after something bad happens and then reacting to that can be a costly mistake. So again, if you have more than $250,000 in retirement savings build up and you want to get that retirement team action plan, all you have to do is reach out to us. We'd be happy to put that together for you.
And all you need to do to get started is reach out. The number 419-794-3030. Once again, 419-794-3030. Threats and opportunities is a very common theme in what Nolan and the team at America's Retirement Headquarters talk about, being able to find where those opportunities lie in times that more often than not will give people a little bit of emotional uncertainty. It was a theme in one of their classes they had earlier this year. It's going to be a topic that comes up at the Economic Summit in October. If you'd like to attend that, they invite you to go to arhq.com, click on the events tab for more information, including how to go and reserve your seat. Or if you can't make that, you can also just skip the line again, take advantage of this retirement team action plan offer right now by giving a call, 419-794-3030.